Welcome back. So yesterday, Nykaa held its beauty summit. It's a highly anticipated event, and there were lots of interesting takeaways. They spoke about how the beauty segment is one of the fastest growing segments. The market size is anticipated to hit $34 billion over the next couple of years. Men's is a growing category. So to talk more about it and what are the implications for Nykaa, Karan of Elara Capital is now with us. Karan, lots of interesting takeaways. L'Oreal's India MD also said that how the next 2 decades are the most exciting time for India's beauty industry. What would your key takeaways be from what we heard yesterday?
Hi, Rima. Morning. So I think it's a clear indication that beauty market is expected to grow at a fast pace. And I think within that, I think online will grow at much ahead of the overall growth rates. Overall online BPC growth rates could be about 20 to 25%. Nykaa being a market leader will see a very big advantage out of this. I think the threat of quick commerce is now kind of overdone because companies like Nykaa have got a very strong presence in the non-metro markets where quick commerce is not present for now. I think even in terms of competitive intensity, we haven't seen other platforms really scale up in the BPC segment, which is why Nykaa will probably have the clout here. I think in terms of categories, hair care, skincare are the two good categories. Large, can potentially become very big with very hefty growth rates. A lot of product innovation is happening in these categories as well. So net-net, I think it looks like a very strong growth market, with lower competitive intensity, and players like Nykaa will continue to have a clout because of the premiumization and the trustworthiness factor.
Karan, you are expecting Nykaa to see a steady-state revenue growth in the range of 30 to 32%. Now, do you think that can continue? What will aid that particular revenue growth? And do you see margins sustaining or maybe even improving from the current levels, given the fact that you mentioned competitive intensity is reducing?
So I think in terms of growth, the core BPC segment growth rates remain to be about 22 to 24% as per our assessment. They have kind of merged the B2B and the man segment. That's why the growth rates right now for the BPC segment are more towards 30% plus. But there are no changes in terms of core BPC growth rate. I think that will continue more led by customer additions and more led by frequency. I think AOV is largely capped as far as Nykaa BPC is concerned. So that's the first thing. Second thing, on the margin front, I think it's very clear that there are multiple levers for margin expansion as well. One is, the discounts have now kind of come off. We saw this entire threat from quick commerce over the last 4 to 5 quarters because of this discounting has increased on Nykaa. So I think that's largely done with. It's kind of plateaued. I don't see any kind of lower take rates from here on. So there's no margin pressure basis that. Other two levers are basically on ad revenue. So we have seen a comeback in terms of ad revenue in Q1. And hopefully, if this potential continues, we'll see better margins basis that as well. And there is also lower losses from the fashion and the other business, which could actually lead to a better margin for the overall BPC business. So the point is that I think we are assuming a margin expansion of anywhere between 200 to 250 bips over the next 2 to 3 years. And if that plays out, you could see, earnings grow or rather EBITDA CAGR of anywhere close to 35 to 40%.
What about Nykaa Man's? Where does it stand at currently in terms of a size, and what is the potential?
So Nykaa Man, the numbers are exactly not known, but they club this entire B2B and Nykaa Man segment, which is potentially about very small in terms of size. It is about sub 10% as on today. The core business remains to be BPC, but clearly expansion into multiple categories, focusing on private labels, going T2C, focusing on the hair care, skincare, fragrance kind of categories, going global, going omni-channel. These are all potential growth drivers for Nykaa. And I think if they're able to kind of execute on margin, you will see upgrades as far as numbers are concerned.
You spoke about 200 to 250 basis points of margin expansion from here on, and there are multiple levers to that. So this Nykaa Man and B2B are not expected to be big growth drivers, and also elaborate a little bit more on Nykaa Fashion and the kind of losses they currently have and how it's expected to be. You spoke about it coming down.
So firstly, Nykaa Man and B2B are expected to be big growth drivers, but they're coming at a small base. In terms of overall contribution, they are sub 10%, so there's not a big impact basis their strong growth. But yes, growth potential in those segments are about 60 to 70% or even more than that on a CAGR basis. So that's the first thing. And losses have to converge in these segments. So the B2B segment is currently making losses, and that is negatively impacting the BPC business EBITDA. So if the losses converge, you could see margin expansion beyond 200 bips, as per our assessment. As far as fashion is concerned, the growth therein has been very volatile. We have seen times where the business has grown 35-40%. We've seen times where the business has grown 20-25%. So I think a sustainable growth with 25-30% kind of a number, with increase in market share and with reduction in losses is a key monitorable here. Because if you look at the fashion business, the overall contribution to valuation is more than about 7-10%. Because clearly the margins are, they've not made margins. They've always made losses in the business, but they have guided for a break-even point over the next 2 years. And if that were to happen, then you could see rating in the fashion business as well. So maybe this 10% contribution moves up to 15-18%, and that could also drive further upside. So there are incremental triggers which can play out, but that all depends in terms of execution.
Thank you so much, Karan. Short but very interesting insight as far as Nykaa is concerned. Time now for a quick break. We'll get you more on the market on the other side.